Hello, my name is Steve Bigelow with the Candlestick Forum. Markets are doing what we can anticipate them doing based upon the T line. As you can see, when the Dow could not get back up above the T line assumption is if you're trading below the T line, the downtrend is in progress. And the reason for that is the candlestick signals are the graphic depiction of what's going on in investor sentiment. The T line acts like a natural support and resistance level of human nature, which means if you're trading below the T line, that means it's already indicated that human nature is bearish or it's not very positive. Anything that is related to negative news is going to make that negative sentiment even that much more forceful. So once you see a major signal that closes below the T line, your first assumption should be, I need to be coming out of long positions and start adding short positions. Same scenarios applied to the NASDAQ. We could see when they came down through the T line that since then it's been in a downtrend. Ever since the absolute sell signal up here, the evening star signal, heading back for the T line. This makes the candlestick signals beneficial to investors in the sense that when we recommended NK today, it was based upon the Doji Harami, right smack dab off the 50-day moving average, a gap up through the T line, telling us more than likely this uptrend's in progress. And you can see what was happening in today's trading when the market was off almost 800 points. The logic behind candlestick analysis is that we can graphically see where the strength is. You don't need an RSI, just use stochastics and the signals, and you'll get a much better degree of probability that it's heading in the right direction. We have a lot of stocks that sold off. They were in the overbought area. GameStop, for an example, this is the ultimate of a sell signal, an evening star signal, and a close below the T line. If the markets show queasiness tomorrow or more downside, this becomes a high probability short. Same scenario on C or KRA. Look at all the indecision up here. Now a kicker type signal back through the T line. Another one with a high probability of going short on weakness. Vine, a doji best friend gap down. Telling you this downtrend is probably heading for the 50-day moving average. There's nothing magical about candlestick analysis. It's very simple. You see what type of signals you have and where you are at the T line, and the probabilities are tremendously in your favor that you're going to be able to analyze which direction a trend will be moving. The cruise lines not being very effective or not being very bullishly affected by the fact that if all the new virus symptoms are coming back, people aren't going to be on the cruise lines. Look at the bearish kicker signal in Norwegian, kind of a wedge formation. This one can be shorted on a breakout of this down or this uptrending support level of the wedge. So as long as the indexes keep continuing to trade below the T line, anticipate more downside. So it doesn't take a whole lot of analytical expertise to analyze what the chart is telling you. You're in a downtrend as long as you're below the T line, which means your portfolio, as soon as you see the indexes closing below the T line, you want to start cultivating out the long positions that aren't working very well and adding short positions. That'll be it. We'll see you in the chat rooms.